Assalamu alaikum wa rahmatullahi wa barakatuh. Jazakallah khair for everybody to join us today. We could be doing so many different things, but we chose to join all of us today. Before we start anywhere, I'll introduce our brother and start with the Quranic recitation. Brother Hafiz Arbaz Hanan is from Franklin. He's a dedicated Imam, Quran teacher, and a loyal HHRD ambassador for many years. Always ready to serve. He's a very trusted and valuable member of our community. Professionally, he excels as an accountant, balancing his role with remarkable dedication. He's connected with Nafis Masjid of Oban. So without further ado, Hafiz and Arbaz, please go ahead.
السلام عليكم ورحمة الله وبركاته. أعوذ بالله من الشيطان الرجيم. قل إن كنتم تحبون الله فاتبعوني يحببكم الله ويغفر لكم ذنوبكم والله غفور رحيم. قل أطيعوا الله والرسول فإن تولوا فإن الله لا يحب الكافرين. إن الله اصطفى آدم ونوحا وآل إبراهيم وآل عمران على العالمين ذرية بعضها من بعض والله سميع عليم. إذ قالت امرأة عمران رب إني نذرت لك ما في بطني محررا فتقبل مني إنك أنت السميع العليم. فلما وضعتها قالت رب إني وضعتها أنثى والله أعلم بما وضعت وليس الذكر كالأنثى وإني سميتها مريم وإني أعيذها بك وذريتها من الشيطان الرجيم. فتقبلها ربها بقبول حسن وأنبتها نباتا حسنا وكفلها زكريا. كلما دخل عليها زكريا المحراب وجد عندها رزقا قال يا مريم أنى لك هذا قالت هو من عند الله إن الله يرزق من يشاء بغير حساب. صدق الله العظيم.
Assalamu alaikum. Have you ever wondered how your legacy could continue to impact the world, even after you're gone? In a world brimming with needs and opportunities, making a lasting difference can seem like a daunting task. But what if there was a way to ensure your contributions lived on, creating a ripple effect of positive change for generations to come? This is Sadqa Jariyah. Planned giving is that bridge between the present and the future. It's a commitment made today that benefits the world of tomorrow. Whether it's a gift in your will, a trust, or an annuity, planned giving allows you to leave a legacy that speaks volumes of your values and your visions for a better world. Imagine a world where every individual in need has their basic needs fulfilled, and hunger and poverty are no longer a reality for them. You can help make this vision come true by including planned giving in your will. Your support by creating an endowment can fund a hospital in Karachi, sponsor orphans, provide clean water, food, shelter, and ensure healthcare for those in need. Helping Hand is more than just an organization. It's a partner in philanthropy. Our vision is to create an endowment fund that eliminates the operational costs, so 100% of the income generated can go to the ones in need in future. Our planned giving initiative provides maximum benefits to the donor and the people in need. With expertise in various giving options, we can help tailor your contribution to match your philanthropic goals and financial needs, ensuring your gift makes the maximum impact. With Helping Hand, help secure the future of your future generations. Planned giving, you're not just donating, you're investing in the future. Your gift becomes a testament of your belief in humanity's potential for goodness and growth. With HHRD's experience and dedication, your legacy will pave the way for transformative change, touching lives and uplifting communities around the globe. Take the first step towards leaving a lasting legacy. For more information, visit our website, call us, or email.
Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome and jazakallah khair. Like I said, we could be doing so many different things, but we chose to be here to listen to our wonderful, wonderful, wonderful friend, partner, Sister Fatima Iqbal. We truly appreciate you all joining us today for this special webinar hosted by Helping Hand for Relief and Development. We are thrilled to have you here as we explore the powerful topic of investing for impact, that is creating lasting legacy gifts. Helping Hand is committed to creating opportunity and strengthening the bond of humanity, all for the sake of Allah subhanahu wa ta'ala. For the last 19 so years, Helping Hand has been dedicated to this mission with both our minds and hearts in it. Alhamdulillah. Today, we are excited to share the insight from our Plan Giving program, an initiative that allows you to leave a legacy of compassion and generosity, ensuring your values and resources continue to benefit future generations. This program is designed to help sustain our work for many years to come, aiming to minimize our operational cost so we can provide more assistance and support to the beneficiaries, inshallah. Today's session is the second in the series. As we all know, this is the month of will. August is considered the month of will, where we are encouraged by our religion also to write our wills, to put our finances in order. So in case the next minute or the next moment, next hour or something, we have been called from this world, and the people we leave behind are comfortable and they know what's happening in the world. So today's session, we will explore how to invest wisely, create legacy gifts that have a lasting impact. You will learn strategies to make financial decisions today and support meaningful causes and positively influence the future. Today, we are honored to have a distinguished guest with us today to guide us through this transformative topics. Please join me in welcoming Sister Fatima Iqbal. I must say here, sorry, I cannot do justice to her long list of accomplishments in this field, which are indeed very impressive, alhamdulillah. In short, I would say Sister Fatima is a distinguished investment strategist and certified financial planner as Azzad Asset Management. With deep expertise in Islamic finances, she excels in crafting ethical investment strategies that align with both financial goals and faith-based values. Sister Fatima's commitment to empowering her clients and her leadership in the financial community makes her a trusted advisor and a pivotal figure in socially responsible investing. Let's get ready to be inspired. empowered and equipped ourselves to create a lasting impact through our financial decisions. Sister Fatima, it's all yours. Jazakallah.
Thank you so much, Brother Humayun. Assalamu alaikum, everyone. It's my pleasure to be with you today. As Brother Humayun said, we could each be doing many things, but alhamdulillah, we're sitting here today and hopefully we'll be able to share some information that will be helpful for you. As Brother Humayun said, my name is Fatima Iqbal. I'm a certified financial planner at Azzad Asset Management, and I do a lot of work on planned charitable giving with my clients. And I'd like to share with you today some of the insights and some of the successful planned giving options that you can also consider for yourselves and for your families. Just to note, today we're going to be talking generally, so none of this advice is meant for individual advice. You should definitely consult your advisors, your tax planners before engaging in any of these types of planned giving, but hopefully the ideas shared today will spur some interest that you can again continue to explore based on your personal situations. So today we're going to talk a little bit, first we'll start off talking about why planned giving. Why are we even talking about this? How is this different from, the one-time donations that many of us make, either by check, credit card, cash? And we'll talk a little bit about some options for giving to charity through existing assets, through planned gifts, and how charitable trusts work as well. So to start out, really, the idea or the discussion about planned charitable giving is really not about doing something different than what we're already doing. It's really about incorporating giving in our current financial plans, incorporating it with what is already important to us, and also taking control over our social wealth. So as you know, we have some ways that we can support the community. One is, we can pay taxes, right? Our taxes go towards various different social causes. But of course, when we pay it to the government, we have no control where that money is ultimately used. So a more powerful way for us to control our social wealth is directed to charities that we know, that we follow, that align with our values. And we can also use certain tax benefits for this reason. So the government says either give us the money, we'll figure out where it needs to go and how to help the community. Or if you want to choose organizations and charitable causes that you feel are important, we'll give you a tax deduction. Of course, there's limitations, but again, that's why it's so important to also understand the tax implications of all of these different types of giving vehicles. Now, planned charitable giving, I would say, is a lot like growing a garden. Many of us now, we're starting to see our gardens bearing fruit and vegetables, and hopefully we'll be able to harvest over the next few weeks. But, the journey didn't start here. We started thinking about what we were going to plant back in May or June, depending on where you live. And similarly, planned charitable giving really is important to understand where we are right now, what means we have, and again, what kind of giving we want to be able to do in the future. The video mentioned Sadaqah Jariyah, and all of us would want to have some sort of charitable gift that continues to be able to give on our behalf way after we're gone. So thinking about these ideas of planned charitable giving can be very important, very pivotal in really making that dream a reality. And I also want to mention, this is not something that is that is just available, that has come around in modern times. Maybe the term planned charitable giving is something that we talk about, but these are the same ideas that were incorporated by Uthman ibn Affan, who created a well, and Umar ibn al-Khattab, and Khadija bint Khuwaylid. So these are all aspects of giving that are really come from our Islamic principles. And alhamdulillah, we have the opportunity as Muslims living in the modern financial world now to take those principles and apply them to, again, our modern financial assets. So with that, we're going to jump right in. I'm going to try to keep this, very easy to understand, I hope. I know some of these concepts might be a little bit more complex, but hopefully we're going to talk about how people can use these different tools. And we'll be using examples to hopefully explain that a little better. So, again, a lot of us are familiar with giving to charity from cash. We write a check, we use our credit card, and it's a one-time transaction. However, whenever we're looking at the best assets for us to give, that may not always be cash. Oftentimes, there may be other assets that we own that actually would be more favorable for us to give, that either may allow us to have a bigger donation or may allow us to have better tax advantages. And giving through appreciated securities, most commonly stocks, is one good way to do that. And of course, these can be giving appreciated stocks or even mutual funds. So let's start with an example to hopefully make this concept a little bit more understandable. So let's say, for example, you have some stocks that you've purchased, let's say 10 years ago, at least they need to be over 1 year. But let's say that you purchased these for $15,000. And over this time, those stocks have appreciated to $50,000. So when you're thinking about, well, I want to give a gift and I could give $50,000 in cash, but that might be tough because I have various different cash flow needs. Or maybe you don't have that kind of cash, but you'd still have the opportunity maybe to make a large gift, maybe to support a project which has come up and you really feel passionate about. You can actually look to your appreciated securities to see if there's an opportunity there. And one of the benefits of giving those appreciated shares rather than cash is that you actually can avoid paying taxes on the gain. So if you're in a high income tax bracket and you sell those shares, you're going to have to pay additional taxes. Whereas if you donate those shares in kind to an organization like Helping Hand, you actually avoid having to pay the taxes on those gains. So to show you again with some numbers what the effect would be, let's again say we're using the same example of having some shares that we purchased $15,000. That's the cash that we put in. Over time, that's grown to $50,000. Now, if we were to decide that we want to sell those shares, we would probably have to pay some capital gains taxes, and that rate can vary depending on your income. So for this calculation, we've assumed the highest tax bracket. In that case, capital gains would be around $8,300. So after paying those taxes, ultimately what you'd be left with would be around $41,670. And as you can see, that would obviously affect how much you can ultimately give. Now, when you do give, you'll be able to also give a deduction. So ultimately, with this situation, your total tax savings would end up being around $15,418. Now, let's try to use our newly learned strategy of donating those stocks directly to the charity. And you can do this, especially if the organization already has a brokerage account where they can accept appreciated shares. Helping Hand has an account like that. Many other organizations may as well. So if you were to donate those shares instead, now you're avoiding paying any of those taxes, those capital gains taxes, and you're able to take an upfront deduction of the $50,000. So in this case, you've now created additional tax savings where your tax savings are now $26,000. So here, compared to giving cash versus securities, you've been able to actually give more than what you would have given otherwise, and you've been able to increase your tax savings. So here again is an example of something you were going to do anyway. It was just a matter of figuring out what is the smarter way for you to do that. So again, just to reiterate, this strategy works if you are giving individual stocks or mutual funds. If you have held those shares for at least 1 year, and again, you're able to take the deduction of the full value of the shares that you're donating. So I hope that example helped clarify that option. Now, let's say the organization doesn't have a place where you can donate appreciated shares, or let's say again you are in a situation where you have some either appreciated shares or you have some cash that you would like to get an upfront deduction for, but maybe you've already completed all your giving for the year, or you're waiting, or you're planning for maybe a larger gift in the future. In that case, a donor-advised fund actually can be a great way to accomplish that. So the way that a donor-advised fund works, it is actually sponsored by a charitable organization, typically a charitable foundation, and a donor can then give either cash or assets, again, stocks or other appreciated assets, to that donor advised fund. And when you open an account with a donor advised fund, that fund, you can name it, based on your family's name. You can give it a unique name. But again, it's a particular charitable fund that you create that you can fund. And whatever you fund in that donor advised fund, you can take a deduction for. Now, the money doesn't have to be given to charities directly. That money can continue to grow tax-free within a donor advised fund. So you can invest that money, you can let it continue growing. And at some point, you can then issue grants from your donor advised fund. So let's say, again, you are in a situation where you want to continue to take deductions, you want to benefit from the charitable deduction. And you're also planning, you're thinking, well, I at some point want to do something really important. At some point, maybe I want to help build a school. I want to help build a masjid, right? And I know I'm going to need a significant amount of money. So let me start planning for that right now. Let me gradually put money into a donor advised fund every year. Let me take that upfront deduction right now when it's going to help me on my income tax return. And let that money grow tax-free in the donor advised fund. Over time, once that money has grown, or you again ready to distribute it, you can again recommend a grant to your donor advised fund and have that money then be distributed to the charity of your choice. So again, this can be another powerful tool that you can use. Many of you may have heard about private foundations. Now, donor advised funds work similarly. There are some differences, but again, this is a way for you to create a charitable fund, but also be able to do it with some less administrative requirements than a private foundation. So again, the donor advised fund, it does have many similar benefits to a private foundation, but again, without the legal, administrative, and accounting costs. It's going to allow you to fast forward those deductions into the year that you make the contribution. So you're not having to wait year after year. When you make a cash donation, you can say, maybe I have a big need to offset income this year. I sold a business, let's say, right? And you say, well, now I have a lot of cash. I'm also going to have to pay more in taxes because I sold this business for a gain. So let me think about how I can offset that. I could offset it by putting money into a donor advised fund, be able to get a larger upfront deduction, but then be able to gradually give that money out to charities in the future. And this can be a great tool also for you as you think about your zakat planning. Many of us, we are accumulating assets as we're working over time in our retirement plans. But at some point, when we choose to stop working, our income may go down, yet we may still have a lot of zakat that we owe. So this can be another great strategy to try to plan for that future zakat that you will need to be maintaining, even when your income goes down.
Is it okay for you to ask a question?
Brother Humayun, I'm okay with that. Unless you'd like to wait to the end.
No, if you're okay, I'm okay. We do have 30 minutes or so at the end also, but it's up to you, Mr. Fat.
Okay. Since we're a small group, I'm happy to take a question, and if we need to dive more into that, we can do it afterwards. But please go ahead.
Yeah, Assalamu alaikum. Well, Jazakallah khair for the presentation so far. One thing that I have struggled with the donor advised fund is to find an institution that can offer some Sharia compliant investment funds. So I've tried Fidelity, Charitable. I've looked at other options too. Is there a Sharia compliant DAF that you would recommend that we can look into, please?
There are a few different ones that are available. At Azzad, there's an option again that we have for a donor advised fund. There's also the AMCF, the American Muslim Charitable Foundation. I hope I got their acronym right. They also have a donor advised fund. So there are a few now that are available, but you're correct. Many of the large donor advised funds like Fidelity, like Schwab, they will not let you control the underlying investments until your account reaches a certain threshold. I think like for some of them, it's like 250,000. After that point, you can start buying your own selected, halal funds or investments. But that is true. That can be a challenge. But alhamdulillah, now there are more, donor advised funds that are available that have halal investment options. I hope that answered the question. So let me move forward with another way that you can give. Now, this is applicable maybe, only to those who, again, who were over the age of 70 and a half, but I'd like to share it because, you might have a parent who might be in that situation, a relative, and this can be another great strategy to continue to support charities by giving through an IRA. Now, to use this strategy, again, you need to be at least 70 and a half years old. And if you've reached the age where you have to start taking minimum distributions. So just to take a step back and explain an IRA, for any of you who may not be familiar, is an individual retirement account. It's a way that many people accumulate money for retirement. Many times a 401k after you stop working may be rolled into an IRA. And with an IRA, you often will receive upfront tax deduction for putting the money or the contribution into the account. And the money is taxed when you actually pull it out. So at some point, the IRS says, look, you've not paid taxes on this money for long enough. You need to start paying. And that's when you have to start paying a required minimum distribution. Right now, for most people who are starting to take their RMD, it's at age 73. But again, this is something, if you have an IRA, at some point you will be forced to pay to take distributions from your IRA. Otherwise, there's a 25% penalty, which is pretty hefty. So in situations where, again, you may have an IRA, you're over the age of 70 and a half, and you have to start withdrawing funds, you'll have to pay income tax again on that money. And that could be very hard-earned money that you've saved over many years. In some situations, we, for example, have clients who have sufficient other income. Maybe they're still working, maybe they're still working part-time, or they have other income sources, and they really don't want to have to pull more money from their IRAs, and they're kind of put into this situation where either they take the money or they don't take the money and pay 25% penalty, or they take it and pay taxes. So giving through an IRA is a way that we can fulfill the RMD, avoid taxes, and continue to support, your favorite charity. So let me explain this again with an example. So let's say that, again, you need to take about $100,000, right? Again, if you were in the highest tax bracket, that's going to mean that you're going to pay around $37,000 in taxes, and you're going to end up receiving about $63,000. Again, if you don't need any of that money and you say, well, I'm just going to give it all to charity, you can give that $63,000 to charity. You can get a deduction for that. And this would give you an estimated tax savings at around $23,000. Again, this example is based on a few assumptions, which you see listed on the slide. Now, the alternative here is if you instead were to give that money directly to charity, then you could avoid paying income tax completely. In this case, you could take that $100,000. That money has to go directly from your IRA to the charity. You can't first take it and then give it to the charity. It has to go directly from the broker that holds the IRA to the charity. You don't have to pay any income tax in this case. It's called a QCD, or a qualified charitable distribution. You also don't get any charitable deduction. So you don't get to deduct this amount either. But in this case now, you can see that your estimated tax savings is actually higher. It's around $37,000. So just another example of saying, I plan to do this. What is just a smarter way for me to do it in a way that enables me to actually give more? So with a qualified charitable deduction, again, you have to take funds directly from the IRA to the charity. You have to be at least age 70 and a half. This amount can be counted towards satisfying that minimum distribution that you have to make. And actually this year, the IRS has increased the distribution limit to $105,000. So every year it may or may not change depending on the IRS guidelines. So for this year now, people can give up to $105,000 from an IRA. And as we know, many times, our assets accumulate, but we tend to have a lot of savings in our retirement plan. So at the end, usually in retirement, a significant portion of our wealth is sitting in IRAs and 401k accounts. So this is another great way to be able to use this. Even if you're not 70 and a half, I like to share this tip because it's something to think forward about. We usually think about our IRAs as being something we're going to use only for our own personal retirement expenses. But now, as you can see, at some point, you may also be able to use this as a charitable tool or a charitable vehicle, to continue your donations. So next, let's talk a little bit about planned gifts. I know we had a session a few weeks ago with Brother Abbad, and he spoke about estate planning. So of course, planned gifts as a part of your estate planning are a great idea. Incorporating charitable causes as a part of your will or your revocable trusts. Of course, you can also name charities as beneficiaries of investment accounts or other policies that you might have. So again, any asset that you have where there's the beneficiary designation, you can take a look at it and see what options are available. Of course, you have to be also mindful of the Islamic inheritance aspect of that and how much you can give, how much of it your family has a right to receive, your heirs have a right to receive. But still, these are, again, vehicles or assets that you have that you can look towards, again, to help you fulfill your charitable goals. So you can also use charitable trusts. So that's going to be kind of the last topic that we touch on. So in terms of charitable trusts, there's various different kinds of charitable trusts, and we're going to talk about two today that I would say, again, are probably more commonly used in terms of charitable trusts. So let's talk first about something called a charitable lead trust. So in this situation, let's say you have someone who is in a high income tax bracket and they want to get the most out of their deductions for the year. Again, they're looking for ways that they can fast forward deductions. So anticipating a high income, again, that might mean that you want to offset it with tax deductions or charitable deductions. So you may want to, for example, say that, well, maybe I have proceeds from the sale of a business or a property, or maybe I just did well this year and I have extra salary or bonus that I have, extra cash that I can use. So in this case, you can put that money towards a charitable lead trust. Now, the way a charitable lead trust works is, first you fund the trust with money. Oftentimes, cash is a good asset to be able to fund a charitable lead trust. And the trust is set up so that it is for a certain time period. And maybe, let's say, for example, 10 years or 15 years. And during the term of the trust, you can set an amount that goes to the charity every year. Let's say, for example, it's 10%, of your initial contribution. So if you put 100,000 into the trust, then 10,000 every year will go to charity for the time period, let's say, of 10 years. Now, what's unique about this trust is at the end of the trust term, let's say again, in this example, if it's 10 years, the remainder then comes back to you for you to be able to use for any purpose. So this kind of trust is often useful for someone who might say, look, I have this money right now. I really would like it to go towards charity. Maybe I'm already making ongoing charitable gifts of $10,000 or $20,000. That's something I know that I'm going to be doing. But for me to be able to take a larger tax deduction this year will be very valuable. But, in 10 years, maybe my kids are going to go to college, or maybe I'm going to be retiring and I don't know whether I might need some additional money for other things. Or maybe I'm thinking about at the end of that period, I want to fund, a foundation. So this kind of trust allows you some flexibility to be able to take the upfront deduction for the money to be able to continuously go to charity for a set term, but for you to be able to receive the remainder of the trust assets at the end of the trust term. So here again, this is a type of trust that you can use for your existing planning, right? You're already wanting to give to charity. You already are thinking about how you might be paying for other personal goals that you have in the future. So this kind of trust can help you align those various different goals, again, just to be able to give in a smart. Now, the other kind of trust that we can talk about is called a charitable remainder trust. So same thing, you may be thinking about, well, how can I ensure that causes that I'm passionate about continue to receive my support even after my death? And in this case, maybe you have some appreciated assets that, you've accumulated over the years. and you're looking to see how you can deploy those again for those charitable causes. But in this case, maybe you're also thinking about, well, I also want to make sure that, I'm taken care of. I'm going to need some income when I'm retired. I want to make sure my spouse also has some income or other beneficiaries are taken care of for a set time period. In this case, a charitable remainder trust can be really useful. So the way that a charitable remainder trust works is the initial contribution is made into a trust called a charitable remainder trust that you create. And by the way, both of these types of trusts typically will involve an attorney to help you draft the trust given the laws of your particular state. And there's various different calculations that also have to be done to figure out what is the upfront deduction that you will be able to receive, what is the expected remainder amount that may be going to charity, and all of these different things. So again, that's why it's really important to work with your financial team, your attorney, your accountant, your financial advisor to really implement these kinds of strategies. But in this case, a charitable remainder trust allows you to make a contribution to a charitable remainder trust, receive a partial upfront tax deduction. Now, the tax deduction that you receive is based on the amount that's expected to go to charity at the end of the term, at the end of the trust. So let's say, for example, someone is 65 years old and they want to set up a trust like this. They want the income from the trust to benefit them and their spouse during their lifetimes. But after both spouses pass away, they want the remainder to go to helping hands. So in this case, when they set up a charitable remainder trust, they'll be able to actually take that upfront tax deduction. They're able to take an income stream over a certain time period or their lifetime, and they're able to ensure that whatever is remaining in the trust at the end of the term, and they can set that to be the end of their life, ultimately goes to charity. And these types of gifts are also irrevocable gifts. So once you put this into the charitable trust, really it's you're really securing the fact that the organization is going to be able to benefit from it. And so you can see, again, this has advantages for the donor. And many of these strategies we've been talking about kind of from the perspective of the donor, but also from the perspective of the charity. How powerful is it for a charity to know that, they are either going to be getting a certain stream of money over a certain number of years, or that they are listed as a remainder beneficiary of a trust? How much more financial security does that provide to our organizations and sustainability for them to start planning as well their projects and what they're doing? So a lot of these strategies are excellent, not just for us as donors, because it's tying in, again, charitable giving we already wanted to do, but doing it in a smarter way, hopefully getting us better tax benefits, but also helping the organizations, helping our community really be able to plan better and, again, have that sustainable revenue to continue doing the good work that they do. So with that, I will conclude, and I'm happy to take any questions that anyone might.
Jazakallah khair, Mr. Fatima. You all can unmute yourself and ask a question or put it in the chat and we can read it out. I know this topic gets very dry very quickly. I've been dealing with it for 2 years, and may Allah subhanahu wa ta'ala bless Sister Fatima. Alhamdulillah. And I'll promote a little bit to 2 partners we have, which is Azzad Asset Management. We picked them after a lot of research and thoughts and process. And we found Azzad Asset Management closest to Sharia compliant than anybody else in this field. So we spend a lot of time talking to them and researching it. So you can invest with Sister Fatima and her team with your eyes closed, and it will go to all Sharia, inshallah. And then we have Brother Abid Awaz, who was here 2 weeks ago with us, who did the will presentation, shariawiz.com. You have an option to work with him on one-to-one, or you can do your own will through his platform. That's all available. And all these contacts, plus 15 more lawyers, are available on our website under the professional help. And there's a lot of wealth of information on there. You guys can retrieve and reach out to any one of us anytime you want, and we'll be more than happy to help. And with Azzad team and Sharia team both, is anytime I've reached out to them, within 24 hours, I have my responses. So they are very proactive, mashallah. Any questions? Sure. I'm sure it will come back. Yes.
I just have one simple question. Like, if we were to summarize like what Azzad has said and management does, and in a nutshell, like what is it exactly do? What sort of things? Yeah.
Sure. So what we do is we work with families to provide comprehensive financial planning and wealth management, including Sharia compliant investing, retirement planning, charitable planning, and we also work with attorneys to do estate planning. But essentially, everything that we do is within the Islamic guidelines. So we don't have any other, we're not a subsidiary of any other firm. This is what we are, solely focused on. And we've been doing this since 1997. I would say, one of the important things with planned charitable giving is, it's really about planning. It's really about tying this into what you are currently doing, for your own family. And I think, oftentimes when we go to fundraisers, we, get very excited, and then sometimes there's this thought, oh, well, what about, the college planning that I was supposed to do? What about, the retirement planning that I need to do? And how do we again ensure that we're able to continue our generosity, right? That over time. So really at Azzad, we work on tying together all of these aspects, within a comprehensive perspective. To really see like how we can make sure that we are able to fulfill our duties to our families and also to our community. And you're also welcome to go to our website, which is azzadasset.com.
Okay, thank you.
Pleasure.
Hello.
Yes, please, sister, go ahead.
Hi, thank you so much for presenting. I'm learning a lot. Do you guys have offices in California, Bay Area specifically?
So as Azzad, we are nationwide. We don't have a physical location, but we service clients in California and nationwide. So happy to talk offline as well. And Brother Humayun, for Helping Hand, do you all have a presence? Where exactly is your presence, I would say, in the US?
We have office in Bay Area and Los Angeles area. So, sister, I can send it to you later on your email, or you can look at hhrd.org/contact us, and all our offices are listed. We have 17 or 19 locations around the country.
And if people are interested in the tools or the topics that we discussed today, you're more than welcome. Please reach out to Helping Hand. We'll be able to, facilitate a conversation together so they can pull us in those conversations as you're trying to figure out the best options for you.
Okay, thank you so much.
Thank you.
Do you also do personal financial planning?
We do.
Azzad Asset Management is a one-stop shopping for all our financial needs, anything and everything, mashallah. Yeah. Inshallah, with their help and with their support, we are going to make Plan Giving also a one-stop shopping for all our Muslims too. We can find out how and where we can do halal investments and Sharia compliant investments, inshallah.
Okay, thank you.
Any other questions? We still have time, folks. We left a lot of time, mashallah.
Okay, I'll ask.
Yes, yes.
I've been using a financial advisor to invest my retirement fund, and they charge me between 2% to 3%. I'm sure this is probably the kind of question that I would get, or the answer I would get from a private conversation. But how do we compensate for your time, for our financial advisors?
Yeah, I mean, I can definitely speak generally about that. There are various different compensation structures that an advisor might have. They may charge a percentage of what they're managing for you. And again, there are ways to see, how that compares to, again, what you're getting, the value for what you're getting, and what you're paying. So I think it's really important to understand, exactly what services also you're getting from your advisor, and also to understand kind of the total fees, because sometimes there may be underlying fees that are within investment strategies that are in your portfolio, in addition to what the advisor might be charging. There may be certain commissions which may be tied to certain products that the advisor is selling. So it's really important to ask, again, what am I paying and what am I getting for that? Because oftentimes, you have to pay for what you get, but at the same time, you also want to make sure that it's something that makes sense, again, for your situation.
At the end, I'll say thank you, Sister Fatima. Jazakallah khair for giving us the time. This is the second session we have done. We will do many more sessions on different topics and whatnot. We'll try to come to conventions and local seminars and try to present these topics one-to-one, face-to-face, because there's a lot to be covered. And in 20, 30 minutes, we cannot do justice to the topics, the depth we have in these programs. I've been working at 2 years just to establish the program for Helping Hand Side. I yet feel like I don't know anything about the program. So there's a lot. We have learned a lot. There's a lot to go. And so reach out to us at Helping Hand or reach out to Sister Fatima. I put her email and her work phone number in the general comment, but it's available on our website at hhrd.org/plangiving. There's wealth of resources again on our website at azzad.org.com or at shariaviz.com. We do also have another non-conventional partner, freewill.com. They also have a lot of wealth information, but underlining is they are not Sharia compliant. I'm pushing them to become a Sharia compliant, and maybe inshallah one day they will. Allahu alam. But they also have wealth of information and knowledge if you can do it. Just generally, and then come back to your imams and scholars in your community or to Sister Fatima, and they can guide you what's right and wrong, inshallah. Jazakallah khair for everybody for giving the hour of the evening out. May Allah subhanahu wa ta'ala bless us. May Allah subhanahu wa ta'ala guide us and give us the energy to do more to help our brothers and sisters globally. Allah subhanahu wa ta'ala has blessed us with a lot of good things. We take a lot of good things for granted, but yet we see in the news day in, day out that our brothers and sisters are suffering all around the world. All around the world, and some of them have been suffering for centuries. They have grown in an environment where they hear bombs and firing and guns, and they have died in that environment. So we are very blessed to be here, and we are obligated to help any way we can, either with spending our time with a nonprofit organization, helping a nonprofit organization to outreach, to network, or if we can donate, alhamdulillah, would be even better. So Jazakallah khair for your time. May Allah subhanahu wa ta'ala bless us, guide us, and give us health and prosper. Jazakallah khair, Sister Fatima, once again. And if Hafiz Arbaz is there, Jazakallah khair for joining us for the tilawat, inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum salam.